Hello and welcome to our look at the Wednesday, August 6th trading session. I have the economic calendar in front of you. And as you can see, we start the day with the leading index coming out of Japan. We think that 105.4 is the midpoint, if you will, of the announcement. Anything above that could be good for the Nikkei, which has pulled back recently and quite frankly needs a little bit of good news to verify that support should be there and see the market go higher. Not a major announcement for the world though. Probably some localized reaction in the Nikkei, and we wouldn't expect much more. German factory orders, of course, comes next, and expected to be 1.1. Could have an effect on the DAX specifically and the euro. If we get a better than anticipated number, that could give the DAX a little bit of a boost, as it has looked rather weak lately, but it's been kind of meandering around the 91.50 level. After that, the next thing that we're watching is the Swiss CPI. It's expected flat. Now, this is another one of those localized numbers expected to affect the dollar Swiss pair if you happen to be in that or have the ability to trade those binaries, or the SMI, which is the Swiss index, which some of you may have access to. Going farther into the day, we have German retail. Again, this is a DAX and euro dollar pair type of situation. Probably won't affect much else beyond that. The British industrial production comes out a little bit later. Anything in this looking at, say, the month over month or the year over year, if we can get above 0.7 or 2.1, could help the FTSE, could give it a little bit of the boost that it needs, and as a result also pick up the British pound, which had a supportive looking day in the forex markets. And as we go later into the day, the next thing we're actually watching is the crude oil inventories. That being the case, if we get a better than anticipated, a stronger drawdown, that could be good for oil markets, as the light sweet crude variety is testing the $97 support level. Looking at the FTSE, you can see that we tried to rally again during the session here on Tuesday, but 67.20 caused enough resistance to turn things back around and form a shooting star yet again. That being the case, it looks like the market's going to struggle, but those British numbers could in fact push it higher. With that being said, though, it does look like we have quite a bit of support below, so quite frankly, the easiest trade is going to be buying above 67.20. The British pound, as you can see, initially fell during the day on Tuesday, but formed a hammer, as it looks like we are going to try to continue to grind higher. Again, those British numbers could come into play, pushing us up towards the 170 level. 170 should bring in a lot of selling, though, so really that's a point of inflection. Short term, though, it does look like the British pound should continue to go higher. Looking at the euro dollar, you can see that we have in fact fallen yet again, and we did break down to a fresh low. So at this point in time, there's really not much to stop this currency pair from going down to the 1.33 handle, which we see as much more supportive and therefore going to be a magnet for price. The question is, what happens when we get down there? The announcements for the day, though, should have the sellers out in full force, unless, of course, they're extraordinarily strong for the German numbers, for example. And lastly, we have the S&P 500, which has fallen rather significantly, and right now could send the market down to the 1900 level on a break of this trend line. Starting to run out of trend lines to draw, though, so things are looking a bit sketchy at this point. Probably more of a technical day in America. Don't really see much in the way of announcements that should move the market drastically, so we'll have to see whether or not this trend line holds. If it does, expect a bit of a grind, probably back up to about 1938 at best. And with that, that has been a look at the Wednesday, August 6th trading day.